Over the past 48 hours, Wall Street has launched a premeditated financial bloodbath against retail investors worldwide. If you stared at the market crash on your screen yesterday and couldn't help but hit the sell button, or if your leveraged account was completely wiped out in the middle of the night by a margin call, congratulations. You have just perfectly walked into the meat grinder trap tailor-made for you by the world's top financial syndicates in 2026. Do you really think that massive cliff-diving red candle on the charts was caused by some inflation data, or a Fed speech, or a change in fundamentals? Don't be naive. In this so-called era of information transparency, every news headline you read, every flash crash you see on the charts is a carefully crafted brainwashing script written specifically for you by Wall Street's algorithmic trading machines and mega short institutions, costing them billions of dollars to execute. They intentionally pull the plug, manufacture panic, and won't even hesitate to rewrite trading rules. Their goal is singular. Before the greatest wealth transfer in human history fully detonates in 2026, they want to violently shake you out of this trade and steal your blood-stained, dirt-cheap silver chips. Because right now, the Wall Street elites know better than anyone. The raging fires in the Middle East, the frantic accumulation by global central banks, and even the greedy AI tech giants in Silicon Valley are secretly draining the last ounce of physical silver on this planet. The rocket is about to ignite, but they absolutely will not allow the average retail investor to get a piece of the action. Mainstream media is still gaslighting you, telling you everything is under control and that the silver bull market is over. But the reality is not only brutal, it is incredibly bloody. While gold has remained stubbornly high, over this recent period, silver, often dubbed poor man's gold, and the asset with the most explosive upside potential, has traded in an incredibly bizarre, almost despair-inducing guillotine pattern. At a time when massive bullish catalysts are converging instead of skyrocketing, silver has experienced violent whipsawing, long wicks, and even massive flash crashes. Countless retail traders who bought the breakout have been liquidated, forced into capitulation, or completely wiped out during this engineered plunge. Countless people have been asking me, has the investment thesis for silver completely broken down? Is there some massive bearish news we don't know about? Today, I am here to tell you the brutal truth. There is zero bearish news. Every plunge and every dump you see on the charts is an epic shakeout conspiracy meticulously orchestrated by top-tier Wall Street syndicates and international short sellers. They know the future value of silver better than anyone, and they are terrified of silver breaking free from their control, precisely because silver is on the verge of an unprecedented super breakout. They must use intimidation, price suppression, and margin hikes to flush out your cheap paper and stuff it into their own pockets before the rocket launches. Because today's video dives deep into hard data and the dark pools of financial markets, it might touch the nerves of certain capital interests and could be shadow banned at any moment. But I am making it anyway. I will comprehensively decode this for you from 5 dimensions: Middle East geopolitics, the central bank's hidden cards, the true demand of AI, the life or death baseline of silver mining, and Wall Street's shakeout playbook. If you still hold silver, or if you are about to capitulate and sell, you must watch this video to the end. It will determine whether you keep your shirt or even achieve generational wealth in the coming Great Wealth Reset. Let's get straight into it. To understand Wall Street's shakeout, we first need to know exactly how massive of a bullish catalyst they are trying to hide. The first layer is the incredibly tense geopolitical landscape. In the spring of 2026, the situation in the Middle East has completely spiraled out of control. The conflict between the US and Iran is no longer a proxy war playground. It's a direct, kinetic collision. What does this mean? Iran isn't just a regional power. It is the absolute choke point for over 20% of the world's oil transit routes. When the war escalates, what is the number one threat facing global capital? It is the return of hyperinflation triggered by an energy crisis. Over the past 2 years, the Fed barely managed to temporarily suppress inflation through high interest rates. Now, with a full-blown war in the Middle East, crude oil could easily surge back to $100 or even $120 a barrel at any moment. Once inflation stages a secondary resurgence, the purchasing power of fiat currencies, including the US dollar, will plunge at a visible rate. Look at history. What happened during the 1970s Middle East wars and the oil crisis? During that decade, driven by stagflation and safe haven demand, the price of silver skyrocketed from $1.50 to nearly $50, a massive 30x return. Today's situation is infinitely more complex and dangerous than the 70s, because in the 1970s, the US debt level was still manageable. Today, the United States is drowning in over $36 trillion of astronomical national debt, and the annual interest expense alone exceeds the defense budget. If they get hit with the dual shock of war and inflation right now, the Fed simply lacks the capital to continue aggressively hiking rates. Their only option is to quietly print money and debase the currency. Against this macroeconomic backdrop of raging wars plus crumbling fiat credibility, silver, the ultimate safe haven asset backed by thousands of years of consensus, should be running like a wild stallion. Yet the spot price is being pinned to the floor. Why? Because someone is compressing the spring. And the tighter they compress this spring, the more apocalyptic its eventual explosive rebound will be. If you think the Middle East is just short-term sentiment, then the second bullish catalyst is a macro megatrend capable of shaking the very foundation of the global financial system: global central bank de-dollarization and frantic accumulation. Don't just listen to Wall Street media boasting about the strong dollar. Look at what the central bank governors, the people managing sovereign wealth, are doing behind closed doors. Since the outbreak of the Russia-Ukraine conflict in 2022, when the West weaponized the financial system to freeze Russia's FX reserves, the non-Western world, especially the BRICS nations, had a profound awakening. They realized money parked in U.S. treasuries can turn into worthless paper overnight with a single political sanction. The only absolutely safe asset with zero counterparty risk is physical gold and silver resting securely in their own vaults. Consequently, the People's Bank of China, the Reserve Bank of India, Poland, Singapore, these central banks initiated an unprecedented gold buying spree, forcefully driving gold to all-time highs. Many will ask, central banks are buying gold. What does that have to do with silver? This is a crucial piece of financial knowledge. Throughout financial history, gold and silver have always been conjoined twins. This is known as the gold-to-silver ratio, GSR. Currently, the GSR is absurdly distorted, peaking at 180 or even 190, meaning it takes 80-plus ounces of silver to buy 1 ounce of gold. However, in the Earth's crust, the natural mining ratio is about 1.8, and throughout thousands of years of human monetary history, the ratio has typically been around 115. As global central banks and sovereign wealth funds push gold to the ceiling, gold becomes extremely expensive and scarce. At this point, spillover capital from global private funds and sovereign wealth will frantically hunt for value. And that massive value anomaly is drastically undervalued silver. What's even more terrifying for Wall Street is that Eastern buyers are no longer playing the paper game. According to data from the Shanghai Gold Exchange, SGE in India, Eastern buyers are accumulating physical silver by the ton. They don't want futures contracts, they demand the physical silver bricks delivered directly to their homes. This relentless draining at the physical level is pushing the Western silver pricing centers to the brink of an unprecedented inventory crisis. If the safe haven and monetary properties are silver's financial left arm, it also has an industrial right arm that makes every other commodity jealous. And this right arm is turning into a supermassive black hole consuming silver, driven by the 2026 global tech revolution. Many people who buy silver only stare at candlestick charts, completely ignorant of how heavily modern tech relies on silver. Let's establish a basic law of physics. Silver is the most electrically and thermally conductive metal on Earth at room temperature. Period. Copper can't beat it, gold can't beat it. Silver is irreplaceable. First, look at the insanely hot AI sector. In 2026, the computing power arms race for large language models has reached a fever pitch. Amazon, Microsoft, Google, Meta are frantically building hyperscale AI data centers. You think AI is just software code? No, the endgame of AI is electricity and physical hardware. Inside a data center packed with tens of thousands of top-tier NVIDIA GPUs, the ultra-high-frequency data transmission and terrifying electrical currents demand the absolute limits from electrical contacts, high-speed interconnects, and high-end chip packaging. These critical components must use silver, silver pastes, silver coatings to ensure absolute signal integrity and minimal thermal resistance. Furthermore, because AI servers generate horrifying amounts of heat, the latest high-end liquid cooling systems and thermal interface materials are heavily doped with nano-silver powder. It's safe to say, without physical silver, humanity literally cannot compute its way to artificial general intelligence. Next, look at green energy. To power these AI data centers and achieve global carbon neutrality, the solar photovoltaic industry is growing at an explosive rate. The current N-type high-efficiency solar cells, like TOPCon and HJT, consume even more silver paste than legacy technologies. According to the Silver Institute, solar panels alone will consume 15% to over 20% of total global silver supply annually. Add in electric vehicles. A high-end EV consumes 2 to 3 times more silver for its sensors, radar, and battery management systems compared to a traditional gas car. Silver is being structurally depleted by modern industry. Remember, 99% of all gold ever mined is still sitting in vaults or jewelry. But once silver is mined, printed onto a circuit board, or coated onto a solar panel, it is virtually lost to Earth forever due to prohibitively high recycling costs. This is a structural super deficit. Demand is exploding exponentially. But what about supply? This brings us to our next brutal reality. If demand is so huge, why not just mine more silver? If it were that simple, Wall Street short sellers wouldn't be in such a panic to shake you out. The truth is, humanity is running out of cheap silver to mine. If you pull the financial statements of the world's top primary silver miners, like First Majestic or Pan American Silver, you will find a spine-chilling metric. Silver's AISC, all-in sustaining cost, is spiraling out of control. Mining silver isn't just clicking a mouse in a video game. You need massive heavy machinery, oceans of diesel, increasingly expensive labor, and you face ever stricter environmental regulations. Before 2020, the average AISC for silver might have been in the teens. But after years of global macroinflation, supply chain crises, and surging energy prices, today, in 2026, the true AISC for many pure-play silver miners is rapidly approaching, or even breaching, the $20 to $25 per ounce mark. Factor in CapEx for exploration, and that number is even higher. Furthermore, high-grade silver veins on Earth are becoming exceedingly rare. The ore grades being mined today are steadily declining, meaning miners have to move exponentially more dirt and burn more energy just to extract the same amount of silver. What does this mean? It means the silver price now has a reinforced concrete floor baked into its physics. If Wall Street maliciously smashes the price below the miner's cost of production, the miner's only logical choice is to strike, shut down the mines, and withhold physical silver from the market. The moment new supply breaks down, facing the black hole of demand from AI and solar, the entire silver market will experience an instantaneous supply chain failure. Therefore, fundamentally, the current silver price is not in a bubble at all. It's a severely compressed spring. Any massive downside here is fundamentally impossible to justify. So, if the fundamentals are this bulletproof, why is silver crashing and trading so bizarrely? That brings us to the core of what we are exposing today. A financial bloodbath designed to steal your chips. Now, I need your absolute undivided attention because what I am about to explain are the bloodiest, darkest operational mechanics of the financial markets. Once you understand this, you will never be terrified by a volatile red candle again. We've laid all the bullish catalysts on the table: Middle East wars, central bank accumulation, explosive AI demand, and a rock-solid AISC floor. With this level of hardcore support, silver had built up immense technical pressure for a massive upside breakout. And it was exactly at this moment that Wall Street's major bullion banks panicked. For decades, they have reaped massive profits by suppressing the price through aggressively shorting paper silver futures contracts on the COMEX. Estimates suggest the ratio of paper silver traded to registered physical silver actually sitting in vaults ready for delivery is astonishingly high, hundreds to one, meaning for every hundreds of ounces traded, there is only 1 ounce of physical backing it up. If, under the convergence of these mega catalysts, retail and institutional investors swarm in to go long, or worse, demand physical delivery, Wall Street's massive short positions would face an apocalyptic short squeeze. These Wall Street kingpins would face bankruptcy-level losses. So, to save themselves, to cover their gargantuan short positions, and even flip long before the price actually launches, they unleashed a classic shakeout combo. Tactic number 1, spoofing and algorithmic dumping. This is the exact crime JP Morgan was fined nearly $1 billion by the DOJ for. Wall Street's supercomputers place a massive wave of fake sell orders on the order book in milliseconds, with zero intention of executing them. This creates a terrifying illusion for retail traders and retail trading software. Oh my God, a massive invisible hand is dumping. Huge bad news. Run. The moment panic selling ensues and the price drops, they immediately cancel those fake sell orders, step in at lower levels, and buy up the chips you just sold at a steep discount. Tactic number 2, changing the rules and hiking margins. When the price rises beyond their control, these capitalists, who act as both players and referees, literally pull the plug. The exchange will suddenly announce, due to recent heightened volatility, we are significantly raising the margin requirements for long silver futures. This move is utterly vicious. Countless retail traders and small institutions using leverage will suddenly receive a margin call in the middle of the night. Can't put up more cash? Sorry, the system auto-liquidates your position. This cascade of forced liquidations triggers a stampede, resulting in an illogical waterfall flash crash with absolutely zero bearish fundamental news. The crash you saw recently was largely the masterpiece of leveraged longs being slaughtered in a chain reaction. Tactic number 3, media complicity and manufacturing fake bearish narratives. As they dump the price, Wall Street-controlled mainstream financial media instantly churns out headlines. Strong dollar pressures silver, geopolitical tensions ease, safe haven demand drops, even when bombs are literally dropping outside, or profit-taking ensues. They use this pseudo-professional financial jargon to brainwash you, making you feel the drop was perfectly justified and pushing you into absolute despair regarding silver. Do you see it now, guys? This isn't a technical correction. This is naked financial robbery. The current price action is highly erratic and psychologically torturous, crashing 1 minute, ripping the next. This is the textbook shakeout phase. Wall Street uses this violent turbulence to shake the weak hands and highly leveraged retail traders completely off the wealth train before it departs. Once retail capitulates in despair, handing over their chips, and the Wall Street sharks quietly reverse their core positions from short to long at the bottom, that is when the true silver mega bull market will explode at an unimaginable speed. By the time that happens, if you try to buy back in, they won't sell you a single ounce. In this casino rigged by capital and algorithms, how do we, as average retail investors, break the matrix? How do we survive the shakeout and actually catch this once-in-a-century ride? I am giving you 3 crystal clear rules for survival. Every single one is a bloody lesson paid for in hard cash. Rule number 1, absolutely, positively never use high leverage for short-term futures trading. In a rigged casino where Wall Street can arbitrarily change rules, hike margins, and pull the plug, trading short-term on leverage is like fighting a cartel armed with Gatling guns while you are completely naked. Even if you predict the exact right direction, if you get liquidated in a minor shakeout right before the massive rip, you still lose. In this volatile shakeout period, deleveraging is step 1 for survival. Rule number 2, embrace physical assets, buy spot, and hodl with diamond hands. Wall Street can print 100 times the paper silver contracts out of thin air to smash the price, but they cannot magically conjure up a physical silver bar out of thin air. In this current phase, the absolute smartest play is to buy physical silver, bars, coins on the dip, or buy spot ETFs with strict 1.1 physical backing, like PSLV. As long as you have zero leverage and you hold physical spot, Wall Street's digital games have zero lethality against you. Let the chart drop to 0, so what? As long as you hold that heavy, dense silver bar in your hand, and as long as industrial and safe haven demand exists, your wealth foundation is unshakable. Don't look at the daily 50-cent fluctuations. Focus on the massive macro cycle that will bring 5x or 10x returns. Rule number 3. Think contrarian. Defeat Wall Street using Wall Street's mindset. When the chart shows inexplicable flash crashes, and when you see financial media universally bashing silver, do not panic. You should be laughing out loud. Because you know this is yet another golden opportunity to acquire blood-stained chips at a massive discount. They want you to surrender your cheap chips? Hell no. Not only do you refuse to sell, but you aggressively buy their dumped supply right at the bottom of the crater. Every irrational plunge is a golden crater for retail to build their ultimate inflation hedge core position. Friends, the world is undergoing a once-in-a-century paradigm shift. The spread of war, central bank de-dollarization, the AI tech explosion, and the collapse of fiat credibility, all of these majestic forces will ultimately converge on gold and silver as the ultimate monetary anchors. Wall Street's current shakeout is nothing but the darkest hour before the dawn. They are barking like rabid dogs, trying to scare everyone away, simply because they can already smell the massive feast of wealth that is about to be served. Do not give up right now. Do not collapse when you are only 1 mile from the finish line. Guard your chips fiercely. Refuse to be shaken out. In the coming era of hyperinflation and the Great Wealth Reset, every single ounce of silver you hold tight today will become your strongest moat to protect your family and achieve generational wealth. If you feel this video uncovered the truth of the market and helped you see through the blood and gore behind the charts, please make sure to like, save, and share this video with friends who might be confused or considering capitulation. Your share could literally save a retail investor's wealth. In this cannibalistic capital market, arm yourself with knowledge. Please subscribe to my channel and hit the notification bell. In the days to come, no matter how violent the financial storms get, I will be right here with you, helping you read the macro landscape and protect your core wealth. See you at the top in the next video.